Welcome to another update from FHAisnow.com and GovernmentBailout.com. I'm Matthew Williams, CMPS. Now, we've seen a whirlwind of legislative activity these past few weeks, and there is much confusion surrounding the recently passed economic stimulus package and the higher loan limits. Unfortunately, the new law can be confusing to decipher, and not everyone will benefit. So the question is, naturally, how is this government program going to be able to help you in your current situation? Now, when the economic stimulus package was passed, it was passed on February 7th, 2008, and was signed into law by the President on the 13th of February. Now, this new law is effective immediately and includes temporary increases in both FHA and conforming loan limits to as high as $729,750 in the high-cost areas. This means that interest rates on many mortgages will go down because these loans are now eligible to be purchased by Fannie Mae and Freddie Mac, or to be insured by the Federal Housing Administration, also known as the FHA. Now, previously, the FHA was only allowed to insure loans with balances lower than $200,160 to $362,790, depending on the county. Now, also, Fannie Mae and Freddie Mac were only allowed to purchase loans with balances at or below $417,000, and that changes every other year. Now, resulting in problems for folks that are in high-cost areas. Now, above these limits, the new law substantially increases the limits in these high-cost areas, and it opens up new financing options and lower financing costs for many of my current clients, and that might fall into a category that you're in right now. So the question naturally arises, will this save you money? Quite possibly. The new law uses a formula to determine home value limits. Now, I have a clear explanation prepared in a white paper with graphs and examples that you can download, but to give you the tops of the hills, if 125% of the local area median home price exceeds $417,000, then the temporary loan limit would be 125% of the median home price, with a cap of the $729,750. Now, let me give you a quick example to illustrate how this can save you money and how this might apply to you. For a more in-depth example, you're going to have to contact me, or you're going to have to look a little bit further into the white paper. Now, if the median home price in your area is, say, $375,000, 125% of that is going to be $468,750. Now, that would put us above the 417 conforming loan limit. Therefore, the conforming loan limit in your area will change and will go up to that $468,750 mark. Now, this number is also higher than the highest FHA loan limits, so therefore your FHA loan limit will also go up to that $468,750 point. Now, this will allow a change that can save you tens of thousands of dollars in interest, which can then be used to invest to buy that second home you've always wanted to buy, or to pay off some other bills, or to send the kids to college, but one way or the other, it's not going straight to a bank in terms of interest. Now, the reason for all this is that I want to help you get to the point where you can spend your money making a life instead of spending your life trying to make money. And a lot of folks find that that rat race is what we fall into, and I like to help people get out of that. Now, to download my complimentary white paper, feel free to email me at the address that I'll throw up at the end of the clip, and I'll make sure you get a copy for your records. And other than that, as always, I'll keep you informed of market changes as they apply to you and as they come forth to the market. Now, as you know, I run a referral-based business from one satisfied client to the next, so feel free to send this video to friends, family, and coworkers if you think that they would find it valuable. Now, I'm grateful for your time today, and I want to look forward to the next time that we talk. And if you have any questions, obviously feel free to contact me at any of the contacts that you have. Again, I'm Matthew Williams, CMPS, and make it a great day.